Hi everybody, Tom Gentile. Welcome to our Trader Mastery Series. This is week number 3. We're going to be getting into butterflies this week. So what I want to do with you this week is we're going to do a little bit of review on what's a call, what a put is, what spreads are. We're going to use our case studies from the last couple of weeks as those of you some of you are joining us for the third week. Some of you that are here new, you're going to get a quick review, and you'll be able to go back and look at weeks 1 and week 2 if you like. All of our videos for our Trading Essentials webinar are up as free videos on our tool site, tomsoptiontools.com. And also you can find them on our YouTube channel, which is youtube.com/tomstradingroom. So we got a lot to cover with you here. And before we get any further into the program, obviously, let me lay out the ground rules for you. Number one, this session is being recorded. We will get the recording to you as soon as we possibly can, within about an hour or two after this event is over. Number two, if you have questions, you can put them in the Q&A box, and Jay will be asking questions on a periodical basis throughout this webinar to both me and our guest instructor tonight, Christina Nugent. And number 3, you've got the disclaimer here on the screen. I'm actually going to put it on the screen even in more clarity for you because I want to make sure that we all get this and that I have it up here for just a moment. And so, as you can see here, you could read this from beginning to end. Now, all you have to do is just hit the pause button when you're looking at the recording. A couple pieces that I want to point out to you. First of all, stock and options trading has large potential rewards, but also large potential risk. The other big piece I want to let you know about here, and we do this at every webinar, myself and everyone associated with Tom's Trading Room, Optionetics, including Christina Nugent, Jay Harris, and others, we are here as your educators. We're here to educate you on how to trade alternative pieces of the market, including options. Now, we're not your broker. We don't offer you specific or anyone personalized investment services. You need a broker to trade with. You must meet certain requirements. And everything we're going to talk about tonight is in US dollars unless noted otherwise. Now, once again, I talked about that I've got 3 big things I want to review with you here. I've got our weeks 1 and 2 agenda or review. I've got homework and case studies, which are going to blend in really good with what we've done the last 2 weeks. And then I'm going to turn it over to Christina, who's going to discuss mastering the butterfly. So let's do a call and put review. And for that, I'm going to turn it back over to the screen. And what we're going to do here is I want to pop on into our tools. And so we're at tomsoptiontools.com. And once you log in, I want to show you what we've been doing. So calls. All right, let's talk about call options for a moment. A call gives you the right to buy. All right, we can expand into that to buy what? To buy a group or a certain number of shares of an asset between now and its expiration date. We pay a premium for that. We do that at a set strike price. And we did that on week 1 with Apple. So as you can see here, we were talking about Apple, and we were talking about the fact that Apple had that potential to move up and double in value over the next couple of weeks. And we're using something called the money calendar, which I showed you last week on Apple. And so I want to walk you through what happened with Apple. And you can see here, at the time, the trade was the October 27th, 155 call. They were trading at $3.01. That means that we have the right to buy 100 shares of Apple for every contract that we purchase. And that means that we're paying $3.01 times 100, or $301 for that position. Now, how did that end up working out? Well, we'll show you that in a minute. The worst case scenario that can happen, and we know this, is that Apple trends down. And if it trends down, the most we stand to lose is what we put into the option. In this case, $301 plus commission. If Apple were to move higher, then we could potentially see a profit. And we were actually looking at profits, and we said, well, what if it goes to above 160? Wherever it goes, on our risk graphs, you move to the area where you have all the lines converging. All right. Once you do that, move down, and you can see what your potential profit is on that particular trade. All right. So that was Apple. So another really cool feature that works within our tools is the ability to do what's called forward testing. We can do back testing, but we can also forward test. So I want to show you what's happened between now and what happened over the next couple of days, weeks, etc. So we know last week that we saw Apple down just a tad. I'm going to go to latest. That's going to take us to the area of 10, oh gosh, what do we call that? 1017? This is 1012, so I want to go, well, we could go plus a day. All right, maybe my quotes or my software is stale here. That's all right, because you know what? I got the backup plan. And the backup plan is to come right over here. And what I'm going to do is I'm going to walk into our charts. Now, I've got risk graphs here. This is Google. We'll get to that in a moment. Baidu. Here's Apple. So here's our $301 chart. Now, like I said, if we just push to the latest date, and we did that. We're actually on 1019 right now. You can see this trade is down $63. Now, I want to share something with you. If you take a look at Apple, what did Apple do today? Well, we had some bad news that came out about the iPhone 8. It's absolutely no surprise to me. We saw that coming. In fact, I actually did an interview yesterday on the fact that I just thought the iPhone 8 was shipping too fast, which meant to me, orders were not coming in as fast as they expected them to. I've never seen an Apple product released where you didn't have to wait 2 or 3 weeks before you got it until the iPhone 8. Well, that news came out, and that's what pushed the stock lower. But did you know that just 2 days ago, this trade, which we paid $301 for, traded as high as $6.22. All right, $6.22 is a double, folks. And that's what we were looking for to get out of at least half of this particular trade. And so it's important that you know that. All right. So in the case that we talked about this, what do? You get out of half of it when it doubles in value, you hold the remainder. So anything we get out of Apple at this point, to me, is pure profit. All right. Next thing we discussed was put options. And we were looking at puts on Bed Bath & Beyond. And with Bed Bath & Beyond, once again, the put options we were looking at in this case were, I'm going to scroll back over here, and we're looking at Bed Bath & Beyond once again. And Bed Bath & Beyond, the puts we were looking at were the October 20th. That's the ones that expire tomorrow, by the way. 25 puts. We were looking at them for $1.83. Now, with Bed Bath & Beyond, check out this chart. It just continues to go lower and lower and lower. Now, this is, let me just double check the date here. If you come on up and take a look at this, this is as of last week. And last week, that chart was showing a profit as it was dropping because remember, we put it on up here, right? Stock drops, profits come in, and we could see as of last week, we were sitting around a $200 profit. Well, folks, that has actually increased even more, all right? So again, puts allow us to make money to the downside. If you are long a put, that means you are short the underlying stock. You have limited risk, limited upside risk. You also have limited downside profit potential all the way to the stock getting to zero, right? So I'm going to show you the end result on this one in just a moment. Now, the next thing we talked about was we were talking about a stock that we pulled up through Darknet. And if you remember, Darknet is our channel collision indicator. It's very similar to a contrarian strategy such as Elliott Wave. The good news is that the wave counts or the counts on Darknet do not change like an Elliott Wave count would. So we looked at several different opportunities in the metals markets, and we all kind of looked at SLV as a potential trading opportunity. If you remember, back on the 5th, we were looking at SLV basically buying the October 27, 15 calls. They were trading right around 75 cents last week. So 75 cents times 100 means that it's going to cost you $75 for that particular trade for one contract. And by the way, when you do something like this and you follow a plan, like a trading plan, then perhaps your idea is, I don't want to risk any more than $500 on any one particular trade. So when you look at a $75 trade, that depending on your money management, you may decide, wow, okay, 1 is $75, 2 is $150, 4 is going to be $300. I could actually put maybe 6 of these on and still not exceed my $500 mark. That might be a way that you handle money management for yourself. Okay, it's totally up to you, but that is an idea. So how is this doing so far? Well, last week, we were up already $53. We'll check in on that one in just a moment. I want to show you a way you can do this by grouping these all together in one tray, in one folder. So that was SLV. Now, last week, we were discussing call spreads and put spreads. And if you remember, call spreads and put spreads, they have one thing in common. You're selling against what you're buying. So, for instance, with a call spread, you're buying the lower strike call, you sell the higher strike call. You're doing this for the ability to drastically lower the cost of that position. So you can go bullish on some big name stocks and still do it with less than $500 out of pocket. The same thing with puts, although you're betting to the downside by buying a higher strike put and selling a lower strike put underneath of it. We found 2 trades last week. All right, I want to cover those with you real quick too. The first one we were looking at was in Baidu. And what's funny was because if you remember, I was using Tesla as an example of how to take a high price stock and create a low trade out of it. But I also said Tesla was not something I was looking at. And we went to Money Calendar and we found Baidu. And I showed Baidu as an example. And so Baidu, we were looking at a trade example between now and the end of October. And so we wound up choosing the October 27, 260, 270 call spread. The 260 calls were trading at 855. The 270 calls were trading at 478. When you take 855 and subtract 478, you end up with a trade that cost you $377 per contract spread. So that's what we were looking at here. And again, like a call, the call spread is bullish. But here's where you run into, I call it the downside. The only downside about a call spread is that you're limited as to how much money you can make. The upside of the call spread is you're drastically reducing how much you could lose. And if you remember last week, we talked about the worst case scenario was $377, where the best case scenario was out here above 600. And that's what we were looking at with, again, the call spread. So how well has Baidu done since then? And I'm going to try this again. I think we might have solved this, but if not, we'll see. Okay, so what we'll do is I'll come back and I will take a look at this all in one slate with you. So this is 377. Also, Google we discussed yesterday. So Google was a call spread where we were buying the 1025 calls. We were selling the 1035 calls. Now, this is a really good example. This is the one, if you remember last week, I told you I wanted to show you this. $23.90 it would cost to buy that 1025 call in November for November 17. But by selling the 1035 call, which was 10 points higher, we're taking in $19.80, and therefore now you've reduced the trade cost down to the mid price of $410. All right, so let's look at the risk graph one more time. Buying a lower strike, selling a higher strike. You can see here, worst case scenario, you're out 410. Best case scenario, you're sitting at about 590, right? And then obviously anywhere in the middle is where we'd stand depending on the price and time to expiration. Now, how well have these trades done? Not a lot of you know this, but we do have a portfolio manager built into Tom's Option Tools, all right? And the portfolio manager is actually very simple to use. What you have to do is you have to first group your trades together into a folder. And once you do that, you can then back test and forward test that folder to see how well it's performing. So what you see here is the ability to create what's called portfolio charts. Portfolio charts, what I've done is I've taken all 5 of our trades that we did over the last 2 weeks, and I put them together with the first 3 trades going in on October 5th, and then the next 2 trades, that's the Google and the Baidu trade going in on the 12th. And you can see what's happened. This has just been a really nice move all the way up to the 12th. Then we added these other 2 trades on. We spiked up. What's happened in the last 3 days? All right, well, let me show you. So we had a little bit of a pullback. This was Google and Baidu. We had a little bit of a pullback. Again, this was Google and Baidu. This was Apple and Google. All right. What do I not have on here? Okay. What I didn't include in this portfolio was getting out of half of the positions when they doubled in value. So if we would have gotten out of half of our Apple trade, because it did double in value right on this day here, then we would have eliminated the majority of that drop, and we'd still be sitting somewhere around $1,000 net profit on these 5 positions. All right, so really cool stuff that I wanted to show you. And let me squeeze back over here, and I want to show you the individual risk graphs. So you can see, for instance, this is Google. And you can see Google is actually down mid-quote about $85 on the trade. So it's down, that trade, that $410 trade, is down by $85. Now, where is Apple? Where is Baidu? So this is Baidu. Baidu's up $115 today. Even with the big moves that we saw down, the market came back and actually was in the green right at I saw the S&P futures in the green right at the close today. And so, I watched Baidu. Baidu had a lot to, it started low and it just started marching higher throughout the day. So it's a big testament to it wanting to stay within its bullish pattern. Now, the good news about Google is we have until November 17th for this trade to turn around. In fact, I would like it to mature out into the middle of November, because that's when you see all of that profit potential come in, is toward the end of expiration. The reason why Baidu is doing so well is because we're using October 27th spreads here. That means that this particular trade is going to expire next week. So we treat our spreads just like we treat those the calls and puts. We get out a half of them if they double in value. We hold the remainder until the end of that pattern, or if something significant changes. Okay, so that is call and put review, call and put spread review, and our case studies. I also showed you again here our performance, and I wanted to show you this as well. So right at about $1,087 when you put in, you take out that the trades that doubled in value, you take half those positions off, so you don't see as much of a drop. And when you do that, all of a sudden now everything starts to look a lot better. Okay, so once again, folks, it all comes down to three things, and I keep preaching this every single week. Not only every single week, but every single webinar I talk about this. And that is, number one, spot the opportunity. Number two, create that low-risk trade. And then number three, which we've been doing, is planning, executing, and managing those trades. So how do you go from something like a Priceline or a Netflix or a Google that has these just unbelievable spreads, and you take that from, say, a $25 or $30 option down to potentially a $5 spread, down to something even significantly more? Well, that's what we want to talk about next. And now I'm going to turn this over to Christina as she starts to cover tonight's session, Butterfly Trading Essentials. So, Christina, are you ready to take over?
I am. So hopefully everybody can hear me well. So Jay, Tom, you guys can hear me okay, right?
Yes, I can.
Really well. Thanks, sis.
Okay, excellent. Well, super excited to be here. For those of you guys who I haven't had the benefit of speaking to or teaching to, I have been an options trader since I was 2.5. No, really more like 20. Tom and I met each other when we both worked at Home Depot together. We actually started trading as basically trading partners in our early 20s. And I'd like to say, Tom, I've only known you for 10 years. I can't even say that. 20 years. Wow, we're close to 30 years of knowing each other, which is kind of crazy. So
I know. We've known each other longer than we haven't. How about that?
Oh, God, that is so frightening. And then some. And then some. We're like at 150% now, baby. So we've seen each other grow up. We've been in each other's worlds in trading and other investments, and I'm thrilled to be here. So just to tell you what we're going to cover today, I'm going to introduce you to butterflies. I'm going to show you some tools that I think are going to be really important and basically reinforce some of what Tom does. I'm going to look at the money calendar in my analysis. I'm also going to look at Darknet, and then I'm going to bring over crossover as well, because one of the things that I like about crossover is the combination of the 30 to 10-day crossover, which really started years ago with Tom's founder of Optionetics with Tom, which is George Fontenelles, who passed away now. What is it, Tom? I hate to put you on the spot, but I think it's like 8 years now.
More like 5, but it's, sometimes
5,
it feels like he was here yesterday, and sometimes it feels like forever.
Yeah, and butterflies was his most favorite trade. I feel honored that I learned it from George, fine-tuned it with Tom, and have been basically trading it as one of my base trades ever since. I also am very fond of credit spreads, so you will find me doing analysis related to how credit spreads would fare versus a butterfly. So the first example I'm going to go through as I start to help all of us understand or remind everybody of what a butterfly is look at an apple chart. Now, as you can see, this is back tested on my birthday in 2016. And one of the things I really like looking at when I'm looking at a stock chart is looking at the support and resistance. So as you can see in this particular example, we're seeing some really nice support here and resistance. And when you see a certain pattern, I like to look and say, all right, what can I do as it revisits a neighborhood? And in this case, looking at it revisiting when it hit that last level of resistance and then bounced back down. Of course, it was due to earnings, but when we want to look at something like that and you see a pattern that you like, one of the ways that I'm going to show you how to manage through butterflies will be through the option chain. We'll also look at the finders that are out there, the fly trapper, the butterfly tools that we have out there for you as well. But I think it's also important to take a look at the actual charts to be able to understand when you look at the option tables is how do we determine what makes sense? What is it that we're looking for? What is the market telling you related to open interest? What are some things to stay away from? And as you can see here, if I look at putting a mouth that's actually a little bit higher at 135 as an example, but really first start with a long call. So the first thing I looked at is give me a call that I feel comfortable with, that I don't want to, that I want to be the driver. So the first thing we're going to take a look at is just a long call. And working from a long call, understanding that if I buy a certain dollar amount, here I have 6 of them, it's going to cost me $456. And as Tom's already talked through, a call is the right to buy a stock at a set price. You make money as the stock goes up. Now, Tom's also in the past talked about the Greeks, the delta, gamma, vega, theta. I always say you have to learn which part of the trade is driving the bus, which in this case is a call, my long call, and then understand who are the passengers of that bus. And in this case, it's going to be the combination of the different passengers, which is the delta, gamma, vega, theta. Now, in this particular example, it's a long call. We make money if the stock goes up. We lose money if it goes down. It looks like we have an unbelievable upside potential. And if the stock moves up very quickly, the best way to do that is with the long call. But it doesn't often work that way. And my crystal ball could allow me to do that good of a job. But what I tend to do is once I decide who's going to be driving the bus, or as I say, who's going to be my workhorse, how can I build something around it? So if I can start with a 125 buy leg, how can I go in and as I make money as the stock goes up, how can I stop the offset of my Greeks working against me? Now, one of the things that is the easiest passenger of the bus to look at is time decay. Every day the stock goes, every day that goes by, options have a limited time of existence. And in this case, as you can see, it's a little bit longer term, 81-day example. But in 81 days, this is done. And as I get closer to options expiration, time goes by quicker. And this is really kind of amplified. Let's see if I can get it zoomed in a little bit. Not in this particular version. I'm going to leave it like this. But at the end of the day, I want to try to mitigate my exposure of the rest of the Greeks, which again will be part of what we cover in our 5-week course. Now, so if I start with the buy leg here at that 125, how can I mitigate some of my risk? Well, Tom's already talked about it. If I pick 135 as an area of where I think I don't believe the stock is necessarily going to go much past that in the time frame of the 81 days that I'm looking at, I can go in and at that point create another relationship by selling an option, selling one option against it. So I can sell one, and then we can create what's called basically that bull call spread. Well, what if I want to do more than that? What if I want to sell two instead? So if I sell two at that point, then what ends up happening is I start losing money once I hit that point. But it decreases my risk potential related to money, time, and volatility. But I've got to stop the bleeding. So at some point here, I've got to come back in, buy again, and then I flatline my scenario. So at the end of the day, what I'm looking at is taking some of my risk exposure out, magnifying my reaction to stock movement in relation to the Greeks, and create a trade that when I'm going in and spending about the same amount of money, about in this case $500, and going in and saying, all right, how can I manage my delta, my gamma, my vega, and theta by creating a relationship that's a little bit stronger, which is creating a butterfly around it. Again, once I determine who I want to be my workhorse, in this case, it's my 125 call spread, then I'm going to go in, find my target, if you will, of the base of the net of my butterfly, go in and say, all right, I'm going to go in and set it at the near 135, and then make that my sell leg times 2, and then I go in and create a butterfly. Now, it looks quite different than that once I go in and position size it to be about 484, shy of $500, have that same relationship where I'm still buying the 125. That's my workhorse, but I'm creating that spread, that butterfly spread, and by selling that 135 and then stop the upside risk potential by positioning a buy leg, that one is create a trade that has actually been, made a smarter impact to me related to my Greeks. Now, how do I prove it to you? Well, I need to show it to you by doing a comparison. So what I've done here is you can see there's 1, 2, 3 legs trade. Whenever you have a change in direction, you've got another leg. When you're making money, when the stock goes up, in this case, you have a buy leg. Once you've hit a certain profit potential, and then all of a sudden you see that the ability, and I'm just looking right now at the black line, if you will, as you see, it's now starting to lose potential instead of just flatlining and being a regular bull call spread where I'm buying and selling one, I'm actually selling 2. Now you see that I'm losing that upside potential. It's getting lower, and then it stops. I can get to a negative once it hits a certain dollar amount. And this, again, is at expiration, but I've stopped the upside risk. But the real thing to look at is I'm never going to take it all the way to options expiration. I'm going to go in and take it to where I feel that is the smartest place for a trade, whether it's related to time or stock movement. And the ultimate trigger is if I ever get in that neighborhood of where I'm selling, that sell leg, and if I do that early, I'm out. If I do it based on the time commitments or the time parameters I have, I'm out. And again, there's a exit strategies, and that's part of what we're going to do is make sure we create a plan. Just as Tom said, the third piece of the puzzle is planning and managing the trade. So that's an important piece of it. But that's at execution. What I really want you to focus in on is the fact that we have 3 different colored timelines. We have a red timeline that you can see here that is the today timeline. The red timeline says if the stock moves today, this is the path that's going to be followed if it happens right away. The reality of it is we don't necessarily at all expect to live on that path. What we expect to and what we manage to, at least I do, is the green line, two-thirds of the way through the trade. So when I put on a trade, whether it's a 7-day trade, a 30-day trade, or a longer term like an 80-day trade, I'm really managing to the green line. And notice when you see here on the green line is this green line that once I hit a certain inflection point, time is actually working for me. Notice that the today line, the blue line, which is a third of the way through the trade, and then you have the green line, tells me that time is actually working for me. So that's one of the benefits that I find that's really a critical difference and really a deal maker for me on butterflies. Now, not all candidates are the right candidates for butterfly. There's slippage that you have to manage to. The more contracts that you have on a particular trade, the more it's going to cost you on slippage. So at the end of the day, we have to find stocks, right candidates for us to be able to do trades. And there are more than enough candidates to manage to. So how do I prove to you this is a good trade? Well, knowing that what I'm doing is I'm buying my workhorse. Which is my workhorse? My workhorse is always the most expensive part of the trade, always. Whether it's a credit spread, whether it's just a regular call spread or put spread, it's always the most expensive part of the trade. The rest of it is basically set up for protection. Protection from money, protection from the Greeks. So as long as I'm making money with my workhorse, the rest of it is there for the ride in order for us to be protected. Now, when I take a look and manage the difference, it's like, well, how do I really analyze what's the best looking trade? Well, that's part of the learning process that the 5-week course will do. But in this particular example, what we're looking at is wanting the stock to move higher. I want it to get somewhere within the mouth, understanding that I make money as the stock goes up, and then once I hit the inflection point, I actually make money as the stock time goes by. I also get to see Vega in action, basically the impact of volatility. We all, as a reminder, should know that as the stock goes up, volatility goes down, so that number needs to be as small as possible and managing to that. So all those pieces work together, but the only way really to prove to you that this is a good strategy versus a call or a call spread, in this case I'm just going to compare it to a call. One of the great tools that we've always had with Platinum Optionetics and now lives even stronger in Tom's trading room is the ability to go in and do an overlay, to go in, pick a trade and say, you know what, I'm going to go in and compare the trade and then through the life of the trade. Now this is in back test mode. I'm going to, in a short order here, show you an example that I'd like to follow with Priceline. And things that I think is critical too, because for me, knowledge is power, but understanding it, because having great tools is important, but understanding how to manage it. Be aware that in the help, under help, there's forums. And under the forums, you have the ability, and this is available to you for the life of the class, is you have the ability to ask questions. And right now I have 3 new openings, which is Welcome to the Butterfly Class, Questions, and Priceline. I will be following Priceline just as we have on previous classes. You can see there's been lots of viewing, lots of activities for the different case studies we've had. I think it's important to see that we share pictures in our forum, questions back and forth, very interactive and this is where the meat and potatoes really happens in the class. We only have 90 minutes, of which I strongly suggest that you pay attention and obviously pay attention, but listen to the class and recordings again, and as you take notes, timestamp it, because that's going to give you real value.
Hey,
but
Christina.
Yes.
Can I just mention really quickly, you mentioned Priceline.com, and I want to let everybody know who's come in a little bit late that there is a handout that Christina will be working from here shortly, and you can actually find that. If you look in the right-hand panel between the audio controls and the Q&A box, you will see the PDF there, and all you got to do is click on it. You can download it, you can view it, you can print it, but it's there for you. We're going to be using it shortly.
Thank you for that. And if you don't have time or resources to print it now, don't fret at all. It'll be there for you in the emails that are sent out. But if you do have the opportunity to print it now and have it available, because the Priceline is a current example that we will be looking forward, and I can tell you that it looks like a very solid study for us to follow. So now what we're looking at is the actual butterfly, and I'm going in, and when you hit the overlay button, it allows me to do a comparison of two different trades. So again, we're still back in time on November 28th, and there are two trades that we're looking at. If you haven't seen overlay before, I'm going to talk through it. It is one of the smartest ways to learn is by comparison, taking a left trade, which is basically the green trade, which is my butterfly, and I'm comparing it to a right trade, which is a long call. They both have about the same amount of money. That's as close as I could get to position sizing it in whole option quantities, and then really looking at 6 contracts of a long call. That is obviously my workhorse. It's the only part of the trade. Comparing that to a butterfly, where the most expensive leg is my workhorse, which is also my 125. I'm able to buy more of them. And though initially we may have related to the, again, butterfly spread is the green trade, that top left trade. That's going to be the darker colored when we look at the risk graphs. What we're doing is we're starting with a delta that is smaller than just the long call, as well as the other driver of stock movement, gamma. But what we're also seeing is immediately I have a level of protection against my effect of volatility and my effect of time decay. Now, over time, it plays out. And what we're looking at is the ability to say, all right, my long call and my butterfly has the same buy leg of 125. And then at expiration, you can see it has a very different reaction. The call, again, the light colors are the orange, light blue, light green. And we're comparing that to the butterfly, which is the darker colored black, dark red, dark blue, and dark green. And basically, both of them clearly show us that we'll make money as the stock goes up. Bottom line is, we'll make money as the stock goes up. Both of those end up making money. The key is which one's going to make money for us in a smarter way. If it happens right away, it's clearly the orange outdoes the red. The red looks like it's a bit flatlined. Sure, that's today. Over time, as we go from 81 days in the trade to 54 days in the trade to 27 days in the trade, you can see the dark green to the light green, what's happening in this trade. The dark green is clearly doing better than the light green for a good majority of the trade. So that's something to pay attention to, all the way to close to that 135. And that's at 27 days to expiration. We're going to show the example, live through it, and take a look at how it manages through. So that's the beginning of the trade. So this particular case study is on 11/28. Let's move it forward to 12/16. So basically, we're going to let 30 days go by. We're going to take a look at the butterfly trade versus the just call spread. Let's take a look at where we are. The butterfly trade, the top trade, is got $242 of profit potential, where the call itself has 150. So clearly you can see that 30 days into the trade, the stock has actually moved up to 115. So compared to when we first put on the trade, the stock was at 111. So it's gone from 111 to 115. Not a big move in 30 days. And the fact that in 30 days it only moved up 4 points, that's where you're seeing that the rest of the Greeks, the rest of the passengers on the bus are impacting us. But because as you can see, the butterfly, that left trade, is showing me that my time impact is shy of $9 versus my time impact on the call is 12.5, and that's playing a part as to why we're not seeing as much of a profit potential. What we've done is set ourselves up to make money smarter, even though we're not anywhere near the mouth of the trade. And notice how things have changed also as the trade has matured. So as the trade has matured in this particular trade example, so let me get to that so I can draw on it. Okay, well, let me just do it straight on here. So basically what we're looking at is, look at where the stock's trading now, 115, comparing the red and the orange. Very, very close. But what you also should notice is the upside potential. Let's move it forward. Let's go from December. Let's go forward to the date of January 20th. So now I've taken it another 30 days. We've got in the trade, we've got 28 days left in the trade. There is my butterfly for my three-legged trade. Then I have my straight call, and the straight call, my workhorse, has clearly, made a bit of an increase. So let's say that. So it's not been a big move. So it went from 76 cents when I first got into the trade. Now it's trading about 80 cents. So that's my workhorse. So that's where we see a little bit of profit in my long call. Not a lot, $24. But notice what's happened to my butterfly. My butterfly has seen the same workhorse benefit, but what else has happened? Well, the original options that we sold, the 135 calls, because the stock is trading at 120, my 135 calls have actually decreased in value, which is a good thing. If I sell something at 20 cents and I'm able to buy it back at 5 to 6 cents, that's a very good thing. And my upside, make sure I don't lose a ton of money, that's negligible. It only cost me 8 cents to get in. These I expect to expire worthless. Not a big deal at all in the big picture. But what I want you to see is the power of having those extra passengers of my gamma, vega, theta along has given me the opportunity to have a stronger stock movement factor in delta and gamma. My vega is a big number, bigger than my long call, so that's not necessarily a good thing. But my theta on both is about the same. At the end of the day, I'm seeing some real profit in that particular example. I'm going to move forward to the date of the basically 2 weeks left options expiration. I've got 14 days left. What's happened to the underlying stock? It made a nice move after earnings. So I'm at 129. What are you seeing in the stock chart? Notice the long call versus buy. Notice how what's happened to the actual curvature of the line time. 28 days left to expiration. Time is working for me in the butterfly, against me in the call spread. Once I hit a certain inflection point, notice we get past that inflection point here. And as the stock now is at 129, I've got a positive theta. The time passenger on this bus is working for me. It's working against me here. At the end of the day, what are we looking at? I've made some good money on my long call. There's no doubt about it. My 6 options that I bought for 76 cents is trading at $4. And most of us would say this is a slam dunk. Don't let me not have you look at what the butterfly did, which is almost twice as much for the same amount of money exposure. Look at the Greek. We will be studying the Greeks. We will understand the Greeks to get a true leg up on why we make certain decisions. And at the end of the day, when I look at it at basically at expiration, which we would never hold it to the expiration on a 7-day trade, we'd get out more than likely the day before or earlier based on our trade plan. But here's an example. The long call, absolutely our workhorse, fantastic, a home run by itself, $5,900. But because we had it set up as a spread, guys, this is what I'm talking about. This makes all the difference from an average trader to a elite trader to a partner level trader, as Tom does with his partner team. I want you to pay attention to that. So hopefully that begins to give you an intrigue to say, man, I got to learn more about butterflies, or I need to get back versed in butterflies, because granted, this hit the bullseye. I didn't expect it to hit the bullseye. We saw the potential way before that. Let's now take a look at another example. So what do you think, Tom, if we take a look at Priceline? How do you feel about that?
Yeah, let's go for it.
All right, great. So let's take a look at a current example on Priceline. I'll say that overall, I have, here we go. I am looking at the opportunity to, and this was, the pictures for Priceline were taken before close of business. So it does not reflect actually close exact dollar value. So just be aware of that. But I'm looking at Priceline. Priceline has the same, there's something about a chart that I really like that looks like this, where if I can find a level of pullback that allows me to see territory that it could visit again, that's what I'd like to see. So obviously when Priceline had this big run, I'm going to focus on more of the tools such as Darknet, the crossover tool, some of the other tools that I'm going to talk about to reinforce what stock charts I'm going to look at. But this is primed to exactly like I like it, which is basically very similar to an Elliott wave pullback, saying, you know what, I'm going to put a target that's close to where it's been, what neighborhood it's visited before. So I want to then take advantage of this by going into one of several ways, but go into the option chain and take advantage. Now, again, if you had the chance to print out the case study, remind yourself that you're looking for areas of key resistance, support, and then if you can find the chart which has that resistance already in there from the past, great target to put in as the mouth of your trade. We may even look at it being higher, because at the end of the day, really, with my extended time working with butterflies, is really determining which workhorse I want and building it around there. Some of that is actually told to me by other traders, and I'll explain that as well. So what we're looking at is under the option chain. One of the things you need to do is make sure you're seeing enough. Make sure that you are seeing enough of the stock limits. It defaults at 10%, so you'll have to change that to 20. Also make sure you mark which time period, because there's just so much data to take a look at. Why did I pick November? For several reasons, but mainly because I really liked the number of strikes that are available, making it very active, and I wanted a short-term trade that we can live through our case, our class, a true case study that we can manage to. And basically what I did is scroll down to the November options and took a look at a particular example that I wanted. What did I want to be my base? Now, Priceline is a very expensive stock. I mean, when you look at the stock chart, this is a stock that's trading at nearly 2,000. I mean, who would have thought? But here we are nearly at 2,000. So it's not a cheap stock. And if you were to just buy an option straight out, you're talking about spending a lot of money to be able to buy one particular option. So what I did is, part of what I do is I take a look at open interest to determine where I'm going to be. Also, I want to make sure my deltas are in line, part of what we'll cover also in the class. But at the end of the day, I ended up picking the 190 for us as an example. Actually, that's not true. The 1990 is the base of what I did for a trade example. So we're going to start with 190 at first. Now, why? Honestly, because I wanted the mouth of this trade to be right around 2050. I wanted to be really close to where it kind of traveled before. So you can see there's the mouth of the trade. And when I say the mouth, it's the sell strike. So I'm looking at this 2050. And I took the 2050 and I said, all right, if I'm going to sell this at 1785, if that's going to be my sell price, how much really in total dollars can I get? So if I go in and say, all right, I'm taking $17.85 and I'm going to times that by 2. Actually, I should do it with the decimal points, but I didn't in this case. Equals 35.70. So as you can see, it's very close to this dollar amount here, 34.95. That gave me what's the spread here? So one of the things that you want to look at when you're doing a trade, let me see if I can get this a little bit smaller in size. There we go. Is making sure I'm looking at an equidistant. So if I'm going to put a certain strike distance on one side of it, so I'm basically, in this case, taking a strike of 2050, that's my center strike. So I'm taking the 2050, and I'm doing a sell leg at 1990. I've got 60 points between my strikes. So basically from here to here, I've got 60 points. I'm going to do the same on the top end. So I'm going to take my 2050 and add 60 to it. And that's going to give me my 2110. Now, by doing that, it's a bit of a pricey trade. It's $800. In order to do a true comparison, I'm going to go above my normal example that I use in class of no more than $1,000. But in this case, I'm going to start with a 1 by 2 by 1. I'm buying the 190 call. I'm selling the 2050 call. I'm selling 2 of them. And because I'm selling 2 of them, I'm not just going to maximize my profit potential. I'm actually going to show a decrease in profit. That gives me the benefit of my passengers, my delta, gamma, vega, theta, to react as I would want to in a butterfly. And then I'm going to expect, if the price line is moving higher as the stock chart indicates, as the overall market momentum indicates, if I can get anywhere near where it's been before, as soon as it gets past this inflection point, which looks to be right around 1950, I'm now going to be theta positive, and time is actually going to work for me. I have the potential at expiration to make up to $5,200 on this example. Don't expect to make that much, but if I can take anything more than 100% return, and based on the trade plan that we'll discuss as we develop this trade, both on the losing side if we're wrong and the winning side when we're right, we'll have the potential of making at least 100% profit. But the reality is this the smartest trade? Now, is this particular example, as I zoom in and look, I'm looking at a 1900 to 2200 range, is this the smartest example? Well, there are so many variations. But how do I judge my opportunities? Well, one of the things I do is I look at my open interest. And if I want to make the mouth that 2050 because of past resistance levels, I want to make that my mouth. What are some ways to take a look at? If I look at the column, and I got to scroll all the way to the top here to get to my open interest. So this is the column I'm looking at, the one just left of my strike. I'm going to scroll down. I want you guys to keep your eye on it. So if I want to make my 2050 my mouth, there are different reasons to look at different things. But at the end of the day, the option and version that I looked at had a lot to do with my sheer fellow traders that show interest. And clearly, I have somebody out there. There are people out there looking at 210, and on the opposite side of that, you can see people are definitely looking at the 200s. So that actually became a reason for me to take a look at a more narrow, anyway, a thinner butterfly. Now, by doing that, my workhorse is a little cheaper, and therefore, at the end of the day, my contract size is going to be $1,800 is what I ended up doing for both of them. So one was a 2x4x2 that was a bit wider at about $1,600. I took a more narrow trade that was only $585 for one contract. That became a 3x6x3 for $1,800. And then how do I compare the two? Well, through the life of the 5 weeks, we're going to talk through the trade. We're going to look at the overlay relationship and say, all right, what are we really looking at when we're comparing those two trades? When I go in and let's see, hang on. Let me pull up my Priceline. I'm going to close down my Apple trade. Now, each and every time I do a class, I feel it's important that you guys have tools that you can take advantage of and use. So I do create a worksheet. It's a live current that day worksheet like we have here for Priceline. I put it out before the class starts. So you can print it out. So please be prepared to do that so you can take good notes. My motto is basically we're going to relay the idea strategy. We're going to rinse through it to truly understand, break it down, teach with comparisons, and then we're going to repeat. So we're going to relay, rinse, and repeat are the mottos that I'm going to do. And at the end of the day, I do want to live in some back test versions because I think it's important that we live through the whole life cycle. And in 5 weeks, you can only do so many real life case studies, but we're going to do at least 2, if not 3 real life case studies, which is Priceline. We've already talked about the option chain. So, what we're really going to focus in on is how do these net Greeks work if I've got one contract or if I end up having 3 contracts, and then how do I manage to my inflection point? How do I manage to the fact that time can and will work for me as long as I'm right in the trade, that time is actually going to work for me, and where do I find my right risk to reward? Is it 100%? Is it going to be 200%? Those are different pieces that we're actually going to manage through. So let's go through and talk about the tighter butterfly. So the tighter butterfly has a different set of Greeks. Yes?
If I could just piggyback another point on that, you may have just said that, but some of the questions that are coming in pertain to what if the trade works against you. You've got full lesson plans on that you'll have much more time to get into. When you're
absolutely.
Yeah, okay.
Oh, absolutely. Thank you for that. Absolutely. I can tell you without doubt, not 100% of my trades work. Do I put the odds for me when I work with some of the tools that we have out there? Absolutely. By using some of these great tools that Tom and his team have put together, we're putting way more odds for us. When I look at crossover, if you guys have not had exposure yet on Darknet, I've been privileged to have access to Darknet for 7 years now because it was in test mode for years. Tom made it live. To be able to go in and test and back test and have proof of how you can go in and find candidates, it's about putting the odds in your favor. But bottom line, you got to know how to trade a loser as well as you trade a winner. What you want to do is put more of your winners in your favor, but at the end of the day, it doesn't happen that way. So thank you, Jay, for bringing that up. So at the end of the day, what I want to do is understand, and this is kind of zoomed out. Let me see if I get this zoomed in a bit more. Here we have zoomed in. I'm looking at two different versions of what looks like a pretty darn similar trade. They're similar in that you can see that they both have the same 2050 sell price. What's different is one, the gray or right trade has a strike of 190. The left trade has a strike that's closer in, that 210, and then managing through the Greeks of that. How is it different? What difference does it make? It doesn't seem like much now, but seeing different versions of it, you'll see how the passengers on each of these buses make a difference. How we have a workhorse that's a 2110 that costs us $875, and I'm going to readjust this to close of business because there was a bit of a drop by close of business. So we'll have that set up to truly follow properly. But then what we're going to follow is having the same sell leg and then managing to what happens as we have time decay, what happens as we have the Greeks of Vega, and sheer stock movement, delta, gamma working for us. So Tom, I'm excited that we're going to be able to follow this trade. We're going to follow it obviously in the forum, and we'll have a full game plan to work through that. So I think that's a good example, Tom, of a back test in Apple, showing you how butterflies are built, and then on Priceline, one that we're going to actually, two versions of it that we're going to follow forward. Anything else, Tom, that you'd want me to speak to?
Did I see that right? Is that a 750% reward to risk ratio? Yeah.
Yes, sir, and that's one of the beauties of butterflies. Thank you for pointing that out. Because of the way butterflies are designed, you can very well see 3-to-1, 5-to-1, 8-to-1, in this case, almost 7.5-to-1 reward potential. This, of course, is hitting the bullseye. I don't necessarily shoot for the bullseye, but on a 29-day trade, we could very well see 3 to 4-to-1 as a potential opportunity here.
Yeah, and let me mention, too, that out of all the strategies we've discussed over the last 3 weeks, this one by far has the best reward to risk ratios, and on a dollar for dollar basis or contract for contract basis is always going to have the lower risk associated with it, the lower cost associated with it than anything else that you've seen in the last 3 weeks.
Right. And what I want is to make sure that we make ourselves completely available for questions. So the Priceline case study is actually out there now for those of you guys who register for the class. All you have to do, there's a wider version, then the narrow version. All you have to do is copy this, Control-C, copy, and then I can open up a window. You do need to make sure you're logged into the Tom's Trading Tools, but you type that right in, paste it right in. It will pull up the trade itself. You can save it to your own options tools that would become part of the class for you, and then you can follow the trade. Tom, there's no better way than living through real trades as well as having the benefit of quickly going through back testing. So we'll be following both of these.
Absolutely. And can I take are you finished?
Absolutely.
Well,
yes, sir.
Thank you very much. Let me grab this back because I want to show everyone who's been asking what is this class or series you're discussing. We do this once a year, folks. And so the class that Christina is talking about is called our Butterfly Mastery Series. Now, we did this last May. That was the last time that Christina was in May of 2016. So just so happened that you've been busy all year long. Every time I get a hold of you, you're in a different port of call or a different country. And so you really are.
I just got back from 30 days away. So yes, you're absolutely right.
I have to catch up with you. I don't think I can. In fact, everyone, when I talked to Christina last before she was back in the States, she was in New Zealand, and I was trying to see if she could stop by and check on my place and make sure that the building, the structure's going up. Unfortunately, she was on the wrong island or the wrong side of the island.
The wrong side, right?
Anyway, guys, so Christina is doing a Butterfly Mastery series. She does it once a year. I will say this might be the last year you're doing this because you're becoming harder and harder to pin down for a few weeks.
Yeah, Tom, this will be my last class. So, I mean, last year was going to be my last class, and you and I talked it through, and this will be it. Unless, some major miracle happens, guys, this is the last chance of working through the butterfly class with me. Yes, sir.
It is amazing. We get busier and busier every single year, and part of that is just the time that goes by with things that we want to do. And I know you're a big advocate of that, Christina. And so this class, if you guys are interested in this series, it begins next week, October 15th. Let me go through it real quickly with you and tell you what we're talking about. So this is going to be a 5-week mastery class. These are 90 to 120-minute live online classes. They come with 6 months of access to the recorded sessions. So every class that we do live, you have access to the recorded sessions for 6 months. We also do live case studies, very similar to what Christina showed you with Priceline. So she's going to have live case studies that are going on throughout the 5-week course. You will be upgraded to get what we call the Fly Trapper Butterfly Scan. This is a premium tool. This is something that's only available to our mastery students. It's not available outside of that. So we give you access to this. This is a one-click scan. However, Christina has a couple of other new things that update this for 2017 that I'm going to talk about in just a moment. There's an upgraded forum, and that allows you to have access to actually talk to Christina back and forth through our forum for questions that you either don't get to talk to her about in class or that you just simply didn't even think about. And of course, there's live technical support that goes through this as well on phone, Skype, and email.
Can I mention one other thing also here is there are bits of information like, oh my gosh, how do I actually save a trade? How do I share a trade? How do I do a folder? Well, there's a whole resource that we're going to talk about. Plus, I will be updating some small snippets of recordings that we're going to be offering throughout the 5 weeks as well to take it and look at it at your own leisure.
Right. So we do talk about how you get access to Christina personally as part of this program. You get the Fly Trapper Scan, which is within our premium tools section. And part of the program, Christina will be showing you how to go through and actually access this and be able to do trade sorts on various butterflies that you're looking at, either by the actual stock symbol itself, or more importantly, creating your own group of stock lists through some various methods that she uses. In fact, using crossover methods, using the darknet channels, and even using the money calendar. And Christina, you've really started to explore these areas more so than you ever have, huh?
I have to tell you that it makes all the difference between an average trader and a great trader. I feel very blessed that because you have put out these tools and your team has done that, it's given me an edge that as hard as it is today to trade, I think in many ways, these are premium products that make my trades that much higher in probability.
And I've always told people that, you want to do things as a trader, you want to do things that most people don't even know about. And these 3 things right here, within the Optionetics community, obviously, a lot of people know about Tom's option tools. But we are a very, very small snippet of the entire investing and trading world. And so I like that. I like the fact that, we're not looking, I always said this, we're not looking to grow Optionetics. I'm just simply looking to continue to teach the folks who are Optionetics students and also be able to provide what I believe are the best tools out there, the best advanced workshops and seminars, along with anything else that I can put together that nobody else is thinking about or doing. And these are 3 examples that Christina is going to be using within the Butterfly Mastery class. Now, we're going to add on some bonuses for this class. And so these are kind of cool bonuses that we haven't done this year. And so one is I'm going to be doing a bonus 6th week. So this is actually going to be a 6-week course and not a 5-week course, because I have a particular strategy that I like that I call trading the one-wing butterfly. All right, the one-wing butterfly strategy I'm going to be showing you sometime within these 5 weeks or shortly after these 5 weeks as kind of an addition to what Christina's doing. We'll have real-time case studies with it as well. What I'm really going to be doing over the next 5 weeks is finding what I think are the best setups that are happening. And then when I see those, that's where we're going to teach that class. So you can see those real-time case studies as I like them. So that's triple bonus number 1. Number 2 is that Christina had mentioned something about these snippet videos, these how-to videos. And the how-to videos are everything from the basics of butterflies to how to navigate and create the best risk graphs, how to look at Greeks, how to go in and go from entering a trade to adjusting to exiting a trade, and so much more. And in fact, what I want to do is I'm going to make sure all of you that are watching this webinar get the first video so you can kind of get an idea of a small snippet of what, just a slice of what's going to happen on this entire webinar series. But we want to make sure you get that because it's a very small short video on how to create butterflies. And Christina, you're going to be doing some additional videos for the group as well that we don't have.
That's the plan. When I hear from you guys that, gosh, I didn't understand this, or can you explain that? It's my dedication to the success of the student and the trader to understand it better. So besides the ones that I feel that I run across, I welcome the questions. And that's where the forum really makes a difference to be able to do that.
Okay, and then bonus number 3 is that we obviously, and we do this with all of our advanced courses, we have a money-back guarantee. So basically it works like this. Sign up and join us for week number 1. That's next week. We call it Advancing the Butterfly. And then if after that first week, that first session of the series of now 6 sessions, I might call it, if you don't believe it's as good as that we say it is, then just cancel by email in 72 hours. We'll refund your money, all of your money, no questions asked. So the big question on your mind, and I can see it already because it's coming in, is what is the cost? So the cost of this program, as we put it together, which is the Mastery Series, the recorded sessions, the case studies, the Partner Trapper Scan, which is Fly Trapper, the forums that are upgraded to Christina, the bonuses that I talked about, and the guarantee that we added, the regular price on all of this together is $39.95 USD. Now, I'm going to tell you, typically what we do is for a limited group of people and for a limited time, we'll cut that price in half. All right. And if you know anybody who's taken this class before, they'll let you know they're already looking at this saying, yeah, I know what he's going to do. He's going to do it for $19.95. But seeing as this is the last class that we're doing this year, all right, this is the last mastery class that we're doing for the entire year. We decided, Christina and I decided that we wanted to really put this down to something that was a no-brainer. So what we're doing.
One of the things you also said is that because we have Option X students, some of them that we haven't really been able to train and tutor, is to really give those guys also the benefit as well.
That's right. And so not $39.95, not $19.95, but we're going to do this for $14.95. There's a limited number of spots and time that you can take advantage of this particular offer that we have here. It's over 60% off. So what do you do? Where do you go? Well, the link that you want to go to is www.tomgentile.com/butterfly. Now, I put that in the chat box for you, and let me pop it in there again so you can see and I'm actually going to put it in the Q&A box, and you should have it there. And then I'm going to actually stick it in the chat box once again, and you'll have it there. If you click on this, and I'm going to actually click on it right now. So if I click on this, this will take me to the link, the actual page that we have. And so you can see here what we've done is we've created this Mastery Series with Christina and myself. Begins on October 15th, and we've got that course price there for limited time, and that is the $14.95 price. In fact, actually, it's $39.95. We typically bring it down to $24.95, but this is another $1,000 off. There's only 25 spots that we have available. If you click on the orange button, it says 25 spots available. That will take you to our program with the terms of service on it. Read through the terms of service. If you agree to them, click I agree. This will then take you to our PayPal page. Now, there's 2 ways that you can use this. If you have a PayPal account, you can simply log in. If you do not have a PayPal account, which a lot of people I know don't, down here in the gray area, it says pay with debit or credit card. Once you click on that, it's going to go ahead and set up the parameters for putting in your credit card or debit card information, clicking on Pay Now. Once you pay this, and you'll see it with the special price we have right now of $14.95. Once you see that and you've paid for that, you will immediately get a confirmation letter from Christina and I. That confirmation letter will include the link that will give you the registration for all of the weeks that we have. Now, we have 5 weeks on there. I'm going to be adding that 6th piece in there. All right, I haven't done it yet, but we're going to put that in, and you will get those six classes. So the other thing that's going to happen is soon after that, within the next day, you're going to be receiving a series of videos from Christina. I believe there are 4 of them that will be going out with you, as well as some other things that are going to be coming as well. So want to make sure that you realize that. But again, where are you going? TomGentile.com/butterfly. All right. Once this offer is gone, that price will no longer be there. All right. You will see a big sold out on this tag like we've seen so many times before this year. All right. These sell out quickly. So if you're interested in taking advantage of having Christina as a mentor for the next 5 weeks, along with the bonus sessions, along with the money back guarantee, like I said, try us. See what you like. I find that a lot of people come in for week 1 on a lot of our advanced classes, and they learn so much in week 1 that they're excited to see what happens in week 2, 3, 4, etc. And so we have that for you. We have it at a very special price. And
the one thing that I would like to say is, I know that your money is valuable, and I appreciate your consideration. I can tell you that I'm very proud of our track record. My butterfly trades and my trades that I have followed for OptionX at first and then through Tom's Trading Room, we've had very good success. I take it very seriously. It is the baseline of my wealth, and it will always be, and I would highly suggest that you join me, and more than anything is give me the opportunity to help you be more successful in your trading.
When we used to do publications at OptionX, we had a few publications, and one Christina used to do was, I believe it was called Butterfly Finder.
Yeah, I did calendar for a while, and then I did butterfly. Correct.
Yeah, and they both have almost the same. They have a very similar risk graphs.
Similar.
But I wanted to mention that you had, and I'm going to give you kudos here. You had the best track record long term of every other person that was doing publications.
And I can tell you why, Tom. Besides the fact that you were a great mentor and trading partner, is I always trade risk averse. I always trade what if I'm wrong first. So there are many things that I won't do in order to make sure that I keep my odds higher, because it is about odds.
It really is. And so, guys, that's it. Jay, are there any questions that are on the board that we need to answer before we wrap up?
No, sir, but the commentary is from former students. The education is priceless. Thanks, Christina. She has a
thanks, guys.
Sanders. She's loving the butterflies, and they love to work with you, and they look forward to the class.
Well, the reason why this is my last class is because I truly dedicate an enormous amount of time to the class, because I know your time is valuable, your money is valuable, and I am committed to you finding success with butterflies.
And I might mention one more thing too, guys. Again, I'll have the recording out to you. I'll have all the information on the class as well. If you have any questions, you can email us, support@tomgentile.com. One more thing I want to do is I'll be putting together a follow-up webinar that's going to talk about our trades that we discussed in the last couple of weeks. We've had some good trades here. I mean, if you want to if we cycle through them real quick, I mean,
that's
the
amazing.
Apple trade, you know what, did great, and then it fell down a little bit. But you know what? If you follow the rules, you were already out of half of it when it doubled in value. Take a look at the Bed Bath & Beyond, probably our best trade, and we're talking about a $25 put that went down in value, just continued to drop. This one was just beautiful. And then if you look at SLV, another really good trade that is up 72% so far. Take a look at Baidu. Baidu is just getting started. already up about 30%. And then, of course, Google, which is down a little bit. But we have a lot of time left on this one, as it is our longest-term case study that we're looking at. Again, the portfolio is really looking good, especially when you follow the rules of getting out of half of your positions when you double in value. But I'm going to tell you, out of everything we discussed tonight, the butterfly truly is going to give you the lowest cost, the lowest risk, the highest reward potential if you followed the rules correctly. I'm going to be doing, like I said, a bonus class in a couple of weeks where we're going to look at all these once again. And I'm also going to talk about something called trading the alternative markets. All right, trading alternative markets and investing in alternative markets. And so I'm going to be putting that together. I will have that. You won't even have to register for it again. I'm going to be sending you out links through GoToMeeting. You'll be able to use the same registration you did here too. I'm looking at that somewhere on November 2nd or possibly November 9th. But I'll get the emails out to you guys. Just want to put one more together for you. Really just kind of drive it home.
And classes start, they run every Wednesday, right, Tom? They start at 8, is it 8 or 8:30?
We start at 8 p.m. So it'll be Wednesday starting on the 25th will be the Butterfly Mastery classes. They'll run every Wednesday at 8 p.m. And, of course, the recordings go out literally an hour to 2 hours afterwards. So if you happen to miss one, don't worry. You won't miss it by much because you'll have that recording very soon after. All right? Jay Bird?
Yes, sir.
Any final thoughts, or are we good?
It looks like we're good. There's questions about the access to Tom's tools and such, and Christina's advanced fly trapper tool is going to come with it. So
awesome.
Well,
good. I'm sure if you have any more questions on the matter, folks, you can email us at support@tomgentile.com. Christina, thank you very much. I was glad to catch you. You know, we know that I know you're in one spot for the next 5 weeks.
Yes, you've got me grounded for 5 weeks, indeed.
I do, and I really appreciate that, and I know all of our students do too. Thanks a lot, everybody. I'll have a recording out to you as soon as possible. Have a great evening, and I will look to seeing you real soon.
Bye, guys.
Thanks, everyone. Good night.